Hi, I'm John Ross. I saw a headline this morning that caught my attention. It said, "Crude oil, sell and sell short." Now, I thought that was very matter of fact, so I went in and I read the article. And the commentator's basic premise is crude oil demand cannot keep up with crude oil supply. Now, he has a point. The story in the U.S. shale industry, for example, continues to point towards this relentless build of supply, relentless production from U.S. shale producers. Combine that with the concerns we've seen over the last couple of months about global growth, and worries about global growth then feed into worries about demand for crude oil. So lots of questions around whether or not demand growth around the world will be strong enough to support growing demand for crude oil. Obviously, if we look back to the fourth quarter and saw what happened to crude oil prices, lots and lots of traders and investors believed that demand indeed would fall short of supply and pressure prices lower. And that's what's happened so far. Turn the page to January, and we've seen crude oil rebound very, very sharply. Now, the last week or two, some of those gains have moderated a bit, but we should be asking, will crude oil be able to continue rising, or is this just a rebound in a longer bear market for crude oil prices? Now, if you read Winning Investor Daily, maybe you caught my article this week. I talked a little bit about the interplay between crude oil prices and emerging market economies, including China. This idea that the two of them can work together to impact the prices for crude oil. Now, my expectations, at least for the first quarter and the first half of this year, is that some changing sentiment around emerging market economic growth could help support crude oil prices and drive them higher. And now, we shouldn't forget what the commentator in today's article, is discussing, in that there is some type of fundamental weight around the neck of crude oil prices, in that supply is so substantial. However, I do think a lot of that is priced in. So from a contrarian perspective, I see room for crude oil prices to continue higher, and I see the catalyst being maybe some improvement around sentiment for global growth. Now, I do want to look at a chart in just a second, but let me also point to another headline I saw this morning, and that is that OPEC, sort of the Organization of Petroleum Exporting Countries, led by Saudi Arabia, their production dropped to the lowest level in 2 years. Now, in December, they agreed as a group, as a cartel, to cut production to help support prices after the drop that we saw in the fourth quarter. So here we have one commentator, a devout bear on one side, but we have some news that maybe crude oil fundamentals could get shaken up a little bit here in the near term based on some of the policy of OPEC, or maybe some other things that are happening in the market. So I don't think that the sentiment right now in the near term is decidedly bearish. In fact, I'm leaning toward the bullish camp at the moment. Now, let's turn to that chart for kind of some more insights into why I think crude oil prices can rise from here. This is a daily chart of crude oil futures, and it goes back to August, September of last year. So you can see the big drop that crude oil made in the fourth quarter, and you can see the rebound that has happened so far this year, actually starting at the very end of December to today. And now, it's a pretty impressive move, and it does give some traders cause for concern that this rebound can't be sustained. I tend to disagree with that sentiment, at least for now. I have watched crude oil for many, many years, and it has the ability to just run and not stop. We saw a little bit of that, the fourth quarter of last year with the decline. Maybe we'll see that continue this year. Now, in order to kind of get my bearings when I'm looking at a chart, I like to use some retracement levels, some extension levels, and count kind of the the waves or the legs that price patterns make. So, kind of to try to get a gauge on how much of this decline that we saw in the fourth quarter could be retraced, I would go to a retracement tool in my chart, and I would draw it in from the top to the bottom. So from when that decline began to when it ended. And I would get three common retracement levels: a 38% retracement, a 50% retracement, and a 61.8% retracement. Now, depending on the makeup of this rebound and the pattern that is unfolding would somewhat guide, whether I would expect a 38% retracement or something larger, a larger climb from here. Now, considering the nature of the decline, we're starting to see this rally moderate right at the same level where the decline moderated. I'll draw in a box here just to kind of show you this range where prices are kind of stuck. You can kind of see some symmetry developing here, and oftentimes you see symmetrical price action in a lot of the common patterns on charts. So this suggests to me that if we break out here, we could see another sharp rally that retraces, or that could take the price of crude oil up to $60 pretty easily around this 50% level, or up even to $65 where this 61.8% retracement comes into play. So we would see something maybe like, if I could draw in a hypothetical price action, maybe a surge up to 60 before we get maybe some type of correction, consolidation through here, and then we see maybe another climb to that 65 level where that retracement of this downturn would take us. So that for now would be kind of my basis for evaluating the price of crude oil, where I would start, where I would begin. Of course, lots of things can happen. We could get all kinds of bad news on the economic front that just sort of takes the momentum out from under crude oil, and we see some type of sharp downturn in prices. However, based on how things are shaping up this year, some of the themes that I follow, it does seem to be supportive of crude oil prices in the first half. And one final thing to mention as we look at this chart, as we look at when and how this rebound is unfolding, the first quarter of the year, even into April, tends to be the strongest part of the year for crude oil prices. So if you were to look back to the 5, 10, 20-year averages for crude oil, you start to really see the price, the returns pick up for crude oil in February and March and into April. So we are at that point now. Maybe we see some type of further consolidation in this range between 50 and 55 where we are now, where we saw some consolidation back in November and December. Or maybe we just see crude oil continue higher here. Maybe we make a breakout, then a correction, consolidation, and then another breakout. So let's not write off crude oil just yet if we see headlines like sell and sell short. But let's also be cautious as we make this play, because oftentimes if some fundamental forces are just simply too big and too heavy, we don't want to fight those either. So that's what I'm looking at for crude oil. Hopefully this helps you and maybe in making some of your own trading decisions, maybe getting your bearings for crude oil for the markets. So hope you enjoyed this, and thank you for listening. Thank you for watching. We'll talk soon.